Introduction. One of the most confusing topics for accounting students is bank overdraft. Students often ask, bank account is an asset. Then why does it show a credit balance? Does a credit balance mean the bank account is wrong? Why is overdraft shown under liabilities? These doubts arise because students try to remember rules instead of understanding ownership of money. In this video, we will understand the meaning of bank overdraft, how it arises in business, why it shows a credit balance, its correct accounting treatment, common mistakes students make. By the end of this video, the concept will be completely clear. Meaning of bank overdraft. A bank overdraft is a facility provided by a bank that allows a business to withdraw more money than the balance available in its bank account. This facility is usually given to regular customers against security or agreement, with interest payable on the excess amount. So, overdraft is not free money. It is a temporary loan from the bank. Why perspective matters? Let us clearly separate the two viewpoints. From bank's perspective, overdraft is money receivable from the customer, asset for the bank. From business owner's perspective, overdraft is money payable to the bank, liability for the business. In accounting exams and books, we always use the business's perspective. Nature of bank overdraft. To understand overdraft clearly, ask one simple question. Does this money belong to the business? The answer is no. The excess amount belongs to the bank, is used by the business temporarily, must be repaid with interest. Therefore, bank overdraft is a liability, not an asset. Why it is not an asset? Assets are things owned by the business that give future economic benefit. Bank overdraft is not owned by the business, creates an obligation to repay. Hence, it cannot be treated as an asset. Practical example. Suppose, bank balance as per books equals rupees 10,000. Business withdraws equals rupees 15,000. Extra amount withdrawn equals rupees 5,000. This rupees 5,000 does not belong to the business, is borrowed from the bank, must be repaid. This excess amount is called bank overdraft. Why bank overdraft has credit balance? Let us apply the golden rule of personal account. Debit the receiver, credit the giver. Here, bank gives money to the business. Bank is the giver. Therefore, bank account is credited. That is why a bank overdraft appears with a credit balance. Important accounting logic. Normally, bank account is an asset. Assets show debit balances. But when overdraft occurs, the business no longer has money in the bank. Instead, it owes money to the bank. So, asset turns into liability. Liability always shows a credit balance. Hence, bank overdraft shows a credit balance. Journal entry perspective. When overdraft arises, the bank allows additional money to be used. Applying the golden rule of personal account. Debit the receiver, credit the giver. Here, business receives money. Bank gives money. So, bank account is credited. This credit creates the overdraft balance. Treatment in trial balance. In the trial balance, bank overdraft is shown on the credit side. This indicates that the business owes money to the bank. Treatment in balance sheet. In the balance sheet, bank overdraft is shown under current liabilities. It is never shown as an asset. Common student errors. Many students mistakenly treat overdraft as a normal bank balance. Show it on the asset side. Assume credit balance means an error. Always remember, overdraft is not your money, it is bank's money. Easy memory trick. Money with the bank is an asset which has debit balance. Money payable to the bank is a liability and has credit balance. This logic works in all situations. Final conclusion. To conclude, bank overdraft shows a credit balance because it represents money borrowed from the bank. It is a liability. Liabilities always carry credit balances. Once the ownership of money is understood, this topic becomes completely logical and confusion-free. If you found this explanation helpful, like, share, and subscribe for more clear and concept-based accounting lessons. Thank you and see you in the next topic.